Greetings everyone, welcome aboard. Joseph James here, School Trade, Sideways Markets. It's Thursday morning, July 28th, 2011. Here's your live to recap. Boy, another great day in the room. Hit my gold today, hit it once, gave back some money to gold, hit it again, able to keep that profit level there, about 120 ticks. Had a great day in the room. Lots of members and guests making money along with us this morning. Fast track winners, advanced method winners. We had a lot going on today, but of course, we began our morning here, sloppy summertime, Thursday morning. Jobless claims came out. Now, it's funny this morning. Remember what happened this morning? Jobless claims came out lower than 400,000. But of course, it was 398, and we thought about that being some manipulation of that news event. We were talking about that this morning. So we got right into the news at 8:30. But really, 8 o'clock, 8:30, 9 o'clock, we're slopping around. It wasn't until about 9:30, 9:45 until we actually started getting some moves this morning. We traded gold today. Got some great action on gold today. I'm going to focus on the crude, though, for this purpose of this video. We talked about gold though this morning. They were waiting on the on this big debt vote this afternoon. They back and forth apparently couldn't decide right what to vote on, and so they postponed it to Friday. We may not see anything come out tomorrow either. So what happened on gold today? I think a lot of what happened today was everyone had a plan of attack for this debt ceiling. The debt ceiling never came out, and so it felt like all the big money managers after about 10:30 can hit the pause button a little bit and said, "All right, we'll come back tomorrow and we'll do it then." So we were supposed to get the debt vote. It never came out, rescheduled for Friday. And of course, tomorrow we've got GDP. Now we have the debt vote tomorrow. And of course, we have the Fed, the economic summit tomorrow out of our Fed here in the US. So we know tomorrow now will be jam-packed with all kinds of stuff. It's a summertime Friday. And so once we knew that the vote wasn't happening on Thursday late morning, it felt like everybody got the barbecue warmed up and made it a long weekend. So it really felt like the wind deflated out of the markets here pretty early this morning when we realized we weren't going to be hearing anything more about that debt ceiling. And then knowing tomorrow's a Friday with GDP, right? This debt vote tomorrow, that means traders were quick to get out of the markets today and just wait to see what happens tomorrow morning. We'll talk about the news later on in this video. Here on crude though, look at our chart on crude here. So we made some money on gold, had a loss on gold, made it back though, had a pretty good day on gold today. But crude oil, great example here. Take a look at this chart. Here's my 34 range on crude. Now, we had a lot of clues here today, but boy, you really had to know how to use these clues, didn't you? Now, the first clue we got was this inside day. I always look for the inside day first. And so I'm looking at where's my previous highs, where's my previous lows, inside day. What does that mean for us? It means trade inside the range you're in. So when we rise up to new highs, I'm going to sell those highs. When I fall to the lows, I'm going to buy those lows. Inside day tells me don't expect the fake out breakouts. Look for price to be contained at the highs and the lows. So what I'm going to do is as price falls, I'm buying. As price rises, I'm selling. And today on crude, we saw a test of the high of day. Inside day, I sold the highs. That was my first trade of the day. So we used the inside day today for the first trade of the day, made 36 ticks on it when we, of course, tested the previous high, tested the high of day. That was the first clue. Now, the next clue we get, this is when we start getting a little bit funky here. You can see I've got a bear channel right here, right? Low to lows, bear channel. And where am I? I'm at the lows of that bear channel. You can also see here we have another more short-term bear channel right here in red. Okay, and where are we? We're off the highs of that very short-term bear channel, and then there's this trend line down bottom here, and you can't see where it began, but that was the swing low for it right there, right? The other swing low is way over here, and this becomes a trend line here. And what is that? Well, it's just a trend line support, but if you add it in with this top here, now that becomes a price wedge. Okay, so that's what we're dealing with here this morning. What? Bear channel, right? Bear channel, sideways, inside day, and that price wedge. Now, inside day tells us, buy those lows, sell those highs, be careful of the fake out breakout. And this morning, what happened was, chopping around sideways, we break out of the bear channel. Now remember, what is a very high percentage trade with a bear channel? Selling at resistance. So if I have major resistance overhead here and price goes up, I'm going to sell that with the goal of coming back down. Inside day also tells me sell the highs, buy the lows. So the first trade of the day here, when price came up, tested the high of day, I looked to sell here. Now, once we pushed the high of day, sold that back down, it was a higher high. And what we ended up doing was taking the short off the high. We then saw the sellers fail at the open. And when we saw the sellers fail at the open, we decided let's buy here when we got back up. And again, got in below the lows of this wedge. So we find ourselves getting back into the lows of the wedge, and the goal was to get price all the way to the highs of the wedge. So we begin our day selling the high of day, inside day, and bear channel says sell resistance. We then see the sellers fail. The sellers fail below the open, what I call my zero line, and that gives me a big clue we're probably going to go right back up. And since we knew we had the bottom of that wedge, I always want to buy the lows, inside day, buy those lows, and bring it right back up. Just after 9 o'clock. But remember, I'm not going to sell those lows here because remember, where am I? I'm at the lows of this big wedge. So I'm not going to get short when we go test the low of day. What I want to do here is be a buyer. Never get a chance, just a little bit too slow at that time. We go up here through 9:30 now, and we test the high of day. Now remember, I'm inside that bear channel. When I rise, I want to be a seller. Remember, the bear channel, if I break out of that channel, sell at resistance. Sell the highs of that bear channel. The high of day is right there, and at 9:35, I wait 5 minutes after the news. At 97.71, I make 36 ticks, and we sell this thing back down.